Is now a good time to invest in rental property? The market's hot, rates are moving. Everybody's asking, is this the right time? The truth is, there is no perfect time. There's your time. In this video, I'm going to show you how to evaluate if now is a good time to buy rentals for you. You'll learn how to decide if right now is the right moment to start building wealth with rentals. The best time to buy rentals was 10 years ago. The next best time? You didn't miss it. It's right now. It's not 10 years from now, because in 10 years from now, today will be 10 years ago. If you look back 10 years ago and said, hey, I actually bought 2 houses a year for the past 10 years, do you know you'd own 20 rental homes? And the way that the appreciation works and the debt reduction works, which we'll talk about, you'd be a multimillionaire today. So don't you wish you started 10 years ago? Don't be in a spot where you wish you started now, 10 years from now. Because now is the best time to get started in rentals. But is it the best time for you? Let's dive in. This really comes down to your personal timing. Now, can you buy rental houses without having any money or any credit? Yes, but it's not easy at all. If you want to be successful as a buyer of rental properties, it's really important that you have good credit. It's also important that you have a little bit of cash set aside, maybe for a down payment, though that's not really how we teach to buy rentals, but maybe for a down payment, but certainly for cash flowing your property needs, because things happen, repairs are needed, and just having cash to get you through those tough times is really important. And I don't mean a lot of cash, maybe $10,000, $15,000, a little bit of cash set aside so you don't feel like you're in a horrible place if something bad happens to your property. So if you are not in a place like that, what I would encourage you to do right now is to say, okay, how do I improve my credit from where I am? Maybe you have debts you have to pay off. Maybe you have made some errors in the past and it just takes time. There's no fast way to make your credit better besides being a good steward of what you have now. Many times, money fixes a lot of problems, doesn't it? So if you have old debts you have to pay off or things you want to take off your credit or reduce your debt to income ratio, you want to earn money. I'm going to recommend that you start by flipping a couple of houses. Now you might say, Glenn, I Googled this to find out how to buy rental properties, not to flip, and I understand. But the same fundamentals are true when you want to buy a house to rent as buying a house to flip. The difference is, in a rental, you hang on to your profits for long term and let it grow like it was an investment account. Where a flip, you sell it and get your cash today. So if you're in a spot where you don't really have cash and you don't really have great credit and the money will help you get your credit better, I'm going to encourage you to flip a couple of houses. Make $50,000 each on those properties and use that money to get yourself in a better position. Again, this topic is about the timing for you. Of course it's a great time to buy rentals, but if you're not in a position to do it, I want you to get yourself in a position to do it. And that is have good credit, because that's part of the process, and have a little cash on the side so you're comfortable doing it. Now, you don't have to have cash to buy a rental property. I want to talk to you about that right now because I teach a method called the BIERRRR Method. You may have heard of the BIERRRR Method, B-R-R-R-R-R. I am the BIERRRR Method, B-I-E-R-R-R-R. I think I have enough. Here we go. We want to buy with instant equity. That's the B-I-E part. Buy with instant equity. That means you buy the house with a profit already built in. We teach you how to buy it deep enough, find off-market deals, and buy it deep enough so you have profit built in. By the way, if you want to learn how to buy off-market property with instant equity, subscribe to our channel. There's tons of information on how to do that and do it well. Then the next step is to renovate the house as a rental. Not a full renovation to flip, but a renovation as a rental. Then I want you to put a tenant in by renting the house. Then I want you to refinance the house. So I want you to use a hard money lender or a private lender to get your initial funds. I didn't cover that. Your initial funds to buy that property and renovate it. Then you're going to refinance. So you've made the house worth more money. Now you take out that money, you pay off the hard money lender. You're going to repeat that process again. You're not paying the mortgage. Your tenant is paying the mortgage for you. So I want you to understand this. The reason I say that now is the best time to invest in real estate is because there's a magic that happens in compounding wealth building in real estate rentals. You see, if you use this method You're starting with a property that, let's say, has $20,000 in equity built in because you bought it with instant equity. Then you renovated the house, you made it better, so now it probably has $30,000 or $40,000 in equity sitting right in the house. It would be like going to a new bank and setting up a new savings account, and they say, thank you, here's $40,000 to start your account. Well, wonderful. That's exactly what you're doing with a little bit of sweat equity to buy a rental property with instant equity. Now, you have a mortgage payment. You're not going to pay it. Here's what happens. As time goes on, your tenants are paying the mortgage, which means the overall debt is being reduced every month as they pay the mortgage, right? Look at the gap it's creating. Put my face in between it. There's the gap, okay? This line shows the value of your property. Over time, your property appreciates. Real estate has appreciated for over 100 years. It keeps up with inflation. Sometimes it outpaces inflation. Right now it's been insane. The property appreciates in value. The debt gets reduced by tenants. In this gap, that's your wealth. That's your wealth being built. That's the magic of investing in real estate without using any of your own money in that method I just showed you. So it's imperative that you get yourself in a position where you are ready to do it. Get educated. Make sure you have good credit, because you have to have that to use the BIERRRR method, because you're going to go to banks to get money out. And you're going to use private lenders or hard money to finance the deal in the first place. Right? And then again, get yourself a cash base. The skills you'll learn by flipping 2 houses, not only will you get paid to learn, but the skills you'll learn is how to find off-market deals, how to fund those deals, how to fix those deals by hiring contractors, leveraging both OPM, other people's money, and OPE, other people's experience. You're going to hire agents to find the property for you because you're busy at your current career, right? You're also going to hire contractors to do the work for you, and you're going to manage them. You're not going to do the work yourself. I want you to be a manager of your portfolio, not an active participant in your portfolio, if that makes sense as an investor. Now, rentals work in every market. However, there are certain markets that are a little bit out of reach for most people. Even I don't want to mess around like in Southern California. I'm not going to pay $1.5 million for a 2-bedroom apartment to try and rent it for $5,000 a month. The math doesn't make sense. So some areas it doesn't work, but I can almost guarantee you that on the outskirts of those areas, it does work. So there are some areas that are too expensive, but you just start looking on the outside of those. Go on Zillow, start looking at areas outside there within an hour or 2 drive, and start to build your portfolio in areas where the rents do make sense. The 1% rule is kind of a good rule of thumb. If the rents are approximately 1% of the value of the property, it should be able to be cash flow positive. Now, those are numbers you're going to want to grind down to make sure, but that's kind of a ballpark just to get you in a range. You can obviously tell that if you spend $1 million on a property and it rents for $5,000, that's not going to work. That property has to rent for at least $10,000 or 1% to make it worth money, right? So if you buy a house for $250,000 and it rents for $2,500, the 1% rule says that house should be a decent investment. But you want to look at the numbers because everything varies market to market and deal to deal. But again, it comes down to you being ready, because that's what this video is about, is how you get ready to be an investor. The better your credit, the better rates you'll get on your mortgages. So one of the reasons people ask the question, like, is now a good time? They're trying to time the market. You're never going to time a market. If you knew how to time a market, you'd be a bazillionaire. It's not about time, and this isn't stocks. Stocks is more about timing. Real estate is about just doing. Because you're not going to time the market in real estate investing. You know, people will always need a place to live. You don't see houses spike in enormous changes overnight like stocks do. It takes some time for that to happen. And it doesn't happen in most markets. Only in some of the bigger markets like Las Vegas or Los Angeles do those spikes kind of happen from time to time. Most of the country, real estate is pretty stable and a pretty secure investment. I like it because as you're watching this, you're either standing on, or you're in, or you're driving on a piece of real estate. It's every place. It's the most common sense investment you could ever have in your life, because people will always need a place to live, no matter what. The more action you take, the more clarity you're going to get towards your goals, and the more you'll start to define exactly what you want to do. There's never a perfect time to start, but any time you start is perfect for you to become a real estate investor. It's just about you making the decision that I'm ready to get started and I'm going to start now. Even if you're starting from a place of not having great credit or cash, you can get started. You can find partners that help you. You can get creative. You can raise private money. You can have private lenders on deals. It's going to be a little more challenging, but you can get it done. Start asking yourself the question, how can I, instead of telling yourself it can't be done. And you'll find that as you build your portfolio and get more and more successful, success attracts more success and people will be more drawn to giving you money and helping you build your business. Timing matters much less than targeting the right property. Go watch my next video, the crucial step new investors always make, and I'll tell you exactly how to define what I call your buy box. And your buy box is, what property should I put my focus on so I don't waste my time, I don't spin my wheels, and I find the best property to be the most profitable in the shortest amount of time to build my rental portfolio. I promise you, it is a training you are not going to want to miss if you're serious about building wealth through rentals in the real estate investing space. Go check it out right now. It's right here.